Hey everybody, how you doing? Welcome back to Real Talk with Matt. We're officially halfway through the 2026 year, and I thought it would be a great time to hit pause and talk about what's really happening in the housing market. Because if you're like most people right now, you're hearing mixed messages everywhere. One headline says prices are falling, another says we're heading towards another housing boom. One person says wait for the rates, another person says buy now. And honestly, I think a lot of buyers, sellers, investors, and even realtors are wondering what's really going on. So, welcome to Real Talk with Matt. Let's kick it off.
This is Real Talk with Matt, where no fluff, no filters, just real advice meets real stories. Get ready to level up as we dive into raw, honest conversations about success, setbacks, and everything in between. Whether you're here to find inspiration, grab some practical tips, or just hear what it takes to thrive, you're in the right place. So buckle up, because it's time for some real talk.
All right. So today I want to spend about 20 minutes talking about what everyone is talking about and what we're seeing every single day here at Anchor Home Loans. And I think it's an important conversation to have because there are a lot of things going on. So I want to talk about not what economists are predicting, not what somebody on television is saying, but what we're really seeing with real buyers, real investors, real self-employed buyers, and realtors across Florida, Georgia, Texas, Tennessee, Arkansas, and Connecticut. And I think you're going to find there's a lot more opportunity in this market than most people realize. So let's talk about this. So the market isn't bad. It's just different, right? So one of the best conversations I recently had was with a realtor partner who called me and said, "Man, I've been showing properties 4 or 5 times a week, and we're not even able to put an offer in because there's so many homes for sale." Now, if you rewind us back 3 years ago, that same house would have had 10 showings and probably multiple offers by the weekend. So the question is, does that really mean the market is bad? And not at all. Okay. It means the market is becoming more balanced. And honestly, that is a healthy market. And that's both for buyers and sellers. For years, buyers had almost no leverage at all. And today, they finally have options and the leverage. The inventory is improved. There's a lot of homes for sale. Homes are sitting on the market for longer, and sellers are becoming more realistic. And buyers can actually take a breath and breathe again. And one thing I learned over the years is this: a balanced market feels slow to sellers and fast to buyers. And that's exactly where we are right now and today. So let's talk about home prices versus home values. This is probably the biggest misconception I'm hearing today. People see a price reduction and immediately assume values are crashing. All right. Those aren't the same thing. They're not alike. I recently worked with a buyer looking at a property that originally came on the market around $525,000. The seller eventually accepted an offer around $485,000. Now, some people would say, wow, that home lost value. Did it? The location didn't change. The schools didn't change. The geography didn't change. The neighborhood didn't change. The demand for the area didn't change either. What changed was the seller's expectations. And that's happening all over the country. It's happening in your neighborhood. It's happening in your state. And we're seeing list prices come down. We're seeing negotiations happen between the buyer and the seller. We're seeing buyers gaining leverage. But at the same time, they're still moving to Florida. They're still moving to Georgia. They're still moving to Tennessee. People are still moving and relocating because that's what life dictates. All right. Jobs are being created out there. Families are relocating for whatever reason. The frenzy is gone. The value remains. And I think that's really important distinction. All right. A lot of people see these homes and all of a sudden, they're flagging them and hearting them and on Zillow and Redfin and Realtor.com. And then a month goes by, 2 months goes by, 6 months goes by, and it's under contract. And then you look at the final sale price and it's lower. It's not because the house is only worth that much. It's because that is what somebody's willing to pay for that property. All right. And the good news is, if you're lucky enough as a buyer to be able to buy right now and afford a home right now, and you could get in at a lower sale price and concessions to help cover your closing costs or maybe buying down the rate, think about it when it becomes more of a seller's market, that eventual equity that you'll be able to gain at a much, much faster rate. So let's talk about the biggest opportunity buyers have had in years. This is honestly my favorite part of today's market. As I said before, buyers have leverage again. I recently had a client negotiate seller credits, negotiate the repairs, and still come in below asking price. That conversation would have almost been impossible a few years ago. Back then, buyers were waiving the inspections, offering way above asking price, doing everything they could just to win. Why? Chasing an interest rate. But today, the landscape is completely different. It's different today. We're seeing seller credits, which is awesome because you can use that for rate buy downs, covering your closing costs, all those good things. On top of that, along with price reductions and motivated sellers, all right? And many of these sellers, they're not desperate. They're simply relocating somewhere else, changing jobs, maybe downsizing. I've seen a lot of people downsize lately, retire, or just moving closer to the family. But that creates an opportunity for somebody else. And one quote I love is, the best deals aren't found when everyone is excited. They're found when everyone is waiting. And right now, a lot of people are waiting. That's exactly why opportunities exist. This is why the market right now is healthy if you can qualify to buy a home and if you find the right opportunity where you live. And also, very, very important, I talk about this a lot, working with an awesome mortgage broker and an awesome realtor. Those are the two things that are going to help you set up for success. And I will tell you this, just this week alone, and reminder, it's only Wednesday, I have saved 3 deals. Not even save. I have taken over 3 deals because mortgage loan originators are out there. And I looked them up because I use Model Match, and I could see all the details of what they do, how much business they close. These loan officers are fortunate enough to even get a client to be able to talk to and originate a loan for, but then they're taking 1 to 2 months to do a refinance, which should take 2 weeks. I've snagged 3 deals over $1 million of loans just this week alone because people are dragging their feet. So it's very, very important. I always say this: work with a trusted mortgage loan originator and a trusted realtor partner, and that's going to help you get the best deal possible. So next thing I want to talk about, and this is the big elephant in the room, is interest rates. Of course, we got to talk about the interest rates. Everyone wants to know where rates are going. So we're going to spend a little bit of time on this. And I'm being honest, most people expected rates to be lower by now. The reality is mortgage rates have stayed elevated because of the bond market has also stayed elevated. The 10-year Treasury recently pushed near levels we haven't seen in over a year. That's one of the biggest reasons mortgage rates haven't moved lower. We did see a little bit of movement before March. And of course, the whole situation with Iran, the Strait of Hormuz, Israel, the United States, other countries, blah, 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 and the increase of oil and gas prices has increased the mortgage rates, okay? We also have a new Fed chair who also indicated that there may be potential rate hikes on the overnight banking, the Fed rates, in the near future, unless inflation comes down. So these are all things. I will tell you, though, people who have bought 2 years ago, maybe their rates were in the upper 7s to 8%, I'm doing refinances for them now because it is in a better position, all right? But mortgage rates are a long trend. They're not just overnight, bam, they all drop, all right? It's up, down, up, down, up, down, up, down. It's about when you time it. So I just wanted to make that clear out there. But I'm not the type of person to say marry the house, date the rate. That's a bunch of baloney. But in my professional opinion is, if you can make the home work, you see the value in it, you can afford the payment, you have residual income so you could go enjoy life, the time will come when you can do a rate and term refinance and get that lower payment, or continue to make that payment that you have been making and apply the additional savings towards a principal so you could pay off that mortgage faster. Because the total interest paid on a mortgage is a lot of money. But here's the funny thing. Most buyers don't care or give a crap about the 10-year Treasury. Most people don't even know what it is. They care about one thing, and that is, what is my monthly payment? And honestly, that's exactly what they should care about. I had a buyer tell me 6 months ago, Matt, I'm going to wait until rates hit 5.5%. We almost got there, almost. I talked to them recently, and guess what? They're still waiting. Meanwhile, several homes they loved are gone. They're already sold. Now, maybe rates improve, maybe they don't, right? Nobody knows. Nobody can read those indicators or understand. It's like the stock market. But trying to perfectly time rates is nearly impossible. What I tell my clients is focus on the opportunity, not the prediction. Because if rates improve later, you can refinance if it allows and permits for it. But you can't go back and buy the property you passed on because somebody else already lives there. So, in a nutshell, one thing I do differently is I spend a lot of time with clients talking about payments, talking about the homes that they really like, and they want to go see with the realtor. But I want to make sure it fits. It fits what their budget is. It fits their debt to income ratio, and that they're comfortable with whatever that payment is. Because there's another kicker here is after you buy a property, guess what? You have a new appraised value, and that means the taxes are going to go up. Okay. The taxes are going to go up. So with that being said, it's my job, which a lot of loan officers do not do, is to educate the client on here are the expectations on what you need to bring to the table to close. Okay. Here's what it will look like if you have seller concessions, and here's what your monthly estimated payment will be with taxes, insurance, association fees, plus the principal and interest. These are all things I do with every single client. That way there's no, like quagmires that come up when they get a contract. I've seen it too much where people get a contract and all of a sudden they're working with an online mortgage company, and then they get the disclosures and their payment is like $800 more than what they are willing to spend monthly. So it's important that you work with a great realtor partner and a great mortgage broker to go over those things with you and for you. So hopefully that all makes sense. So here's where the market is making a huge comeback. And I will tell you this, it's the non-QM market, okay? And I'm going to talk a little bit about self-employed buyers. It's probably one of the biggest surprises of 2026. Self-employed buyers are active. They are really active right now. They are business owners. They are entrepreneurs, 1099 earners. They are realtors. They are independent contractors. We're seeing a huge increase in conversations with our bank statement programs and other programs that we have. I recently spoke with a business owner who told me, I've been told no twice already. I've been told no twice already. And after reviewing everything, I found a solution just as fast as they did an application. And here's the thing. They weren't unqualified. They were misunderstood. And they worked with a bank or a mortgage broker that didn't have other opportunities. I always tell everyone, I am a one-stop shop. There is one program that I do not, cannot, and will not do, and that's ground up construction. It's a lot of work. I just have a huge pipeline of families looking to buy homes at a resale. But besides that, there's everything we do. I do HELOCs, HE-loans, second mortgages, DSCR loans, 1099, asset depletion, wealth management loans, commercial loans, FHA, VA, USDA, commercial, 1099 only, bank statement loans, P&L loans, investor loans. I could just keep going on and on. It just doesn't end. But that's what makes my company unique, is that I have all these options, and all I got to do is fit you into the box along with all these lenders and find the one that gives you the best terms for a mortgage, right? So those are all things that you got to start looking at, is what type of mortgage broker or originator are you working with? Are you working with somebody who just does the 4 boxes, conventional, VA, FHA, and USDA? Are you working with a mortgage broker that has a whole bunch of options? And I'm talking probably well over 100 loan options. It's crazy. And that might not sound like a lot, but that's a lot. Okay. That's a lot of guidelines, a lot of different things. Self-employed buyers in the non-QM market is my niche. That is my one thing that I took on before anybody else really knew what a DSCR loan and everything else about 5 years ago. And it's majority of my business, honestly. And I love doing them. So if you're self-employed out there, I will tell you this. Do not work with a online mortgage broker. Do not work with a bank because they will have no options for you unless your tax returns are super strong and you're paying all this buku money to the IRS, which doesn't make sense to do. But at the end of the day is if you have a good down payment, I'm talking about 15, 20% down, the rates are not only better than conventional loans, but the underwriting is, I call it makes sense underwriting, okay? And where we could average your bank statements for 12 months, come up with income, all these different things. So anyways, you could always reach out to me for that stuff. So just getting back into it, just want to make sure everyone understands that. Many self-employed buyers think traditional tax returns lending is the only option. It is not. Bank statement loans, as I talked about, profit and loss programs, asset utilization programs, DSCR financing for investors. There are more options available today than most people realize. And one of my favorite saying is tax returns don't always tell the whole story. Telling you as a business owner, it doesn't. And for business owners, that is almost 100% true. I talked to a client today, runs an ice vending machine company. He has 15 different vending machines. If you had to guess how much money that business brings in, I was shocked. I was thinking maybe a couple $100,000. I wasn't even thinking that high. Almost $1 million per year. Now, there's a lot of expenses and upkeep on that stuff, but I was like, wow, these are the people that need options because the tax returns might not show that much income. And that's where we come into play. That's where we come in to help people. So keep that in mind out there. If you're a realtor out there and you're always struggling with clients and the loan officer that you've been working with, give me a call anytime. Love to help and connect with you. All right. As we move on, investors. This is a big one. Another big part of my business because I could do this almost in every state in the country. All right. But investors are quietly buying while everyone else is watching the headlines. And there's a lot of you out there that are, and that's fine. Investors are watching numbers. And one investor told me recently, I'd rather buy in a market with options than a market with bidding wars. I will tell you this, bidding wars suck. And I couldn't agree more to that. All right. Investors understand something most people do not. They aren't trying to predict next month. They're planning for the next 5 years. You guys start thinking long term, the next 10 years. They're looking at a bunch of different things. Number one, cash flow, appreciation potential, equity growth, rent demand. We all know rent demand is going up because there's a lot of people that can't buy right now. And right now we're seeing a lot of investor activity, especially with these DSCR loans. And I'll do another segment on all these type of programs separately. But especially with buyers looking for long-term opportunities, one quote I always come back to is investors buy based on numbers. Homeowners, they buy based on emotion. Both of them are okay, but they're very different mindsets. And those are things to always keep in mind. So here's what we're seeing at Anchor Home Loans as we wrap this up. Let me leave you with what we're actually seeing right now. Over the last couple months, we're seeing more self-employed buyers, more investors, and we're seeing more seller concessions. Almost all the contracts have seller concessions, all of them, okay? And we're seeing more negotiation opportunities. We're seeing more buyers realize they don't have to compete the way they did a few years ago. And what we're not seeing is the panic mode. What we're not seeing is demand disappear. We're seeing a market that has become more strategic. And honestly, to me, I think that's a good thing. So if you need somebody who is strategic, who can help you get to your goals, whatever they are, if it's an investment portfolio, a commercial portfolio, whatever, a real estate portfolio, you want to upgrade your home, maybe rent out your current one, use that as rental income to offset your debt, and then buy a new home for your family, all those options. I've seen it all. I can help you with all that, all those good things in between. All right. So there's a lot of options out there. In closing, if I had to summarize the first half of 2026 in one sentence, it'd be like this. The market isn't easy, but it's full of opportunities. And I'll repeat that. The market isn't easy, but it's full of opportunity. And the buyers who are winning today are not chasing headlines. They're identifying opportunities. They're staying informed, and they're taking action when the numbers make sense. So whether you're a first-time home buyer, a move-up buyer, a self-employed buyer, an investor, or a realtor helping clients navigate this market, There are real opportunities out there right now. You just have to know where to look. Thanks for tuning in to Real Talk with Matt. We'll see you on the next episode. And we're going to do a lot more series of these. And I'm glad to be back. It's just been super busy. We have made our goal of hitting $225 million in origination. I am so pumped for this. Thank you, guys. Talk soon.
This podcast is all about you, and we'd love to cover what's on your mind in a future episode. And hey, if you found value in today's episode, do us a favor, subscribe, share this with a friend, and drop a review. Let's keep the conversation going and help more people stay inspired in the know. Until next time, stay bold, stay driven, and keep chasing what's next. This has been Real Talk with Matt. Catch you soon.
All right. Thanks, everybody. I really appreciate you. I will catch you next week for the next episode. Goodbye.